Hi everyone, it's PJ Patterson, your friendly financial planner and mortgage broker from Keystone Financial. I wanted to give you a quick rundown. If you're not aware, we had a budget announced on Tuesday, the 9th of May, and for 2017-2018, and there's a number of very interesting things in this budget. Now, attached to this video, you're going to be able to download a couple of papers that give you all of the details about the budget, but there's a couple things I wanted to highlight for my clients because I think these things are probably particularly relevant for most of my client base. So let's get stuck into it. The first thing is that for those of you that have rental property or investment properties and that are not in your immediate location, the ability to deduct for travel expenses is now no longer available. So the ATO and the Treasury looks like they're clamping down on that opportunity to claim travel expenses when they're going to visit their investment properties and do whatever. So that's a very, very interesting removal of a deduction that's probably been around forever. So just be mindful of that. Obviously have a conversation with your accountants when you're putting in claims. I'm sure they'll scrutinize it anyway, but that's a biggie. So the next time you're planning a trip, maybe to go visit an investment property, just be mindful that you won't be able to, in most instances, I don't think you'll be able to deduct any expenses for that. The second thing, and this is a biggie, is that the Medicare levy is now rising from 2% to 2.5% of your taxable income. There's some thresholds for that. You can read those in the attached links to download the budget paper. But just bear in mind that all of a sudden now we've got a 0.5% tax increase on our earnings due to the Medicare levy. So for any of you who are looking to borrow money and continue to extend credit, obviously that means that borrowing capacities are going to be adjusted by that little bit. The banks obviously will adjust their servicing models, but it still is effectively a tax on our income, but not something to not be aware of, I suppose. And you'll probably see those flow through on your pay packets very soon as well. You'll see that slight reduction in your net pay. For those of you who are small business people, they have extended the $20,000 instant asset write-off. So this has been around now for quite some time. I think it was a post-GFC initiative, but it's been around and they keep renewing it every year, so they've extended it for another year. Basically what that means is that if you have an asset that is worth up to $20,000 that you purchase, that you can immediately write that off in your business. So it's quite a powerful tool to use if you're thinking of buying a piece of plant and equipment, copy machine, something under 20 grand in your business. This is a very, very useful thing to have. It'll obviously affect your profitability in your business because you'll be able to instantly depreciate the entire asset. There's some other rules around that. If you have assets that you've been depreciating over a number of years now, if they reach that $20,000 or just below that $20,000 minimum, you can instantly write them off as well. So it doesn't just apply to brand new stuff that you purchase, it applies to stuff that you have maybe been depreciating for a while, and then it just drops below that $20,000 threshold. Obviously you'll need to have the conversation with your accountant though to make sure that I've got all that right and that the rules that you apply work for your business. The last thing that I thought was quite interesting was some changes that they've made to superannuation, where they are now allowing people who are looking to become first home buyers to utilize superannuation as a savings vehicle for saving a first home deposit. Now there's a lot of little tricks around that I'm still working out myself, but suffice to say that they have opened up now this superannuation vehicle as a way for people wanting to get into the property market as first home buyers to actually use that as a savings vehicle. I've got to go through a little bit of those details. I don't really deal in the first home buyer space. Many of you probably watching this now have already got property. That's most likely the case, but you may know people who are looking to get into the property market as first home buyers, so it might be worth giving me a call and having a conversation about that. There's a number of other budget measures that I won't go into, but if you want to, just download that report, have a little skim through it. If there's anything in there that you think you want to have a conversation about that you don't maybe quite understand or want to see how it applies to you, your family situation, or your business, you can always give me a call. Obviously your accountant would also be a good port of call for that as well. So anyway, have a great time reading and digesting that budget report, and you know where to find me if you have any questions. Have a great one. Bye.